Kumar and his colleagues in GSTN, a lot of the work which I'm going to show you would not have been possible. Of course, the cover is pink. We just wanted to make sure that we too, in our own small way, contribute to expressing our support to the movement in favor of women and women's empowerment. In fact, there's a whole chapter in the survey on gender. So with that, let me quickly get to the economic survey itself. This year, we have 2 volumes. We've gone back to the tradition. Last year, we did it over 2 cycles. I think it confused a lot of people, and therefore, we've gone back to 2 volumes. Volume 2 is, of course, the review of what happened over the last year. And in Volume 1, we build upon that to do some in-depth analysis and research and come up with new policy ideas. Overview of this presentation, I'm going to take about 25 minutes and then leave the floor open to questions. Frank, is that a good way of proceeding? I need to judge whether all of you are alert and awake. I don't want to bore you too much. So the presentation, it's in 5 parts: achievements, the analytical review, in particular, understanding the temporary decoupling of the Indian economy. That naturally leads to the outlook for 2017, 18, the rest of the year, and the next year, and the policy agenda. If I have time, I want to highlight some of the exciting new research that we've done that's presented in Volume 1. And I want to conclude with some big thoughts, maybe big and hopeless thoughts, but big thoughts nevertheless. Okay, what are the major achievements this year? I think that I would single out 2 or 3 very prominent ones. The launch of the transformational GST at the stroke of the midnight hour on July 1st. I think what is really important to take away also is the fact, as the finance minister said the other day or yesterday, that not only was it launched, and for something of such scale, complexity, and scope, there were bound to be teething challenges. And I think it's fair to say that one of the remarkable things was, the mid-course, the corrective, expeditious actions that were taken, which have led to a kind of stabilization of the GST. Second, I think that, as you all know, from the very first survey onwards, we have spoken about the twin balance sheet challenge, over-indebted firms or undercapitalized banks, which had kind of held back growth for a long time. We call that the twin balance sheet challenge. I think this year, a series of really very important steps have been taken. The resolution that's underway under the IBC and the NCLT process. And of course, very recently, the recapitalizations, actually the details were announced. I think we think of the twin balance sheet challenge as having 4 R's, recognition, resolution, recapitalization, and reforms. And I think we're now really well ahead on almost all of them. I'll talk about reforms in a couple of seconds, but I think these were very, very important. The binding constraint festering was the twin balance sheet challenge, and I think there's some decisive tackling of that's taken place. So, as validation of these achievements and recognizing India's medium-term prospects, I think for the first time in 14 years, India got the sovereign ratings upgrade. And of course, we jumped many, many ranks in the ease of doing business. So these were, I think, quite very important, even transformational achievements this year. As I said, in order to understand what is happening or what's going to happen in the rest of the year and the next year, we really need to understand what happened in the last 4 to 6 quarters. And I think one way to think about this is to see why the Indian economy decoupled from the rest of the economy for about 4 to 6 quarters. As you can see that for a period, India was accelerating while the world was decelerating. And then from the middle of 2016, kind of the reverse process happened. And that is a bit of a puzzle. And we need to understand why that happened to see what's going to happen going forward. I think this temporary decoupling happened. We explained that in the overview chapter for 4 reasons. First, I think there was this competitiveness impact from the 2 major policy actions, demonetization and GST. And you can see that, this is not proof, but it's all suggestive evidence that for about 1 to 2 quarters, you can see highlighted in white how exports decelerated very sharply and imports accelerated very sharply. So that was kind of some evidence that there was an impact from the two policy actions. Then, of course, beginning in the early to middle of 2016, our interest rates went up very sharply. See how we decoupled from the rest of the world. So interest rates affected demand. In turn, capital came in, strengthened the exchange rate, as you can see on the right-hand side. That also affected our competitiveness. If you look at the trade balance and the services balance, they were affected by that, and that also had a dampening effect on real activity. And this was, again, different from the rest of the world. That's why we kind of decoupled from the rest of the world to some extent. The fourth factor, which I'll talk about later, is, of course, oil prices. Also, this year, oil prices went up. That affected consumption and the government finances, and that also held back real economic activity. So these kind of four factors contributed to the decoupling. And immediately you can see, therefore, what happens going forward. We see now that there is a robust and broad-based revival. I mean, several indicators of activity. We've shown manufacturing growth, GVA growth, even investment, exports, net private transfers, credit. They've all started to pick up. I mean, the direction is very good. The level is still below potential. Should keep that in mind. But in terms of directionally, the economy seems to be picking up quite nicely, quite robustly, and that's what's happening now. So in terms of the short-term outlook, remember that growth is picking up partly because the impact, the temporary impact of demonetization and GST have dissipated. Corrective actions have taken. I think the government is injecting a fair amount of demand into the economy. And above all, I think that exports have picked up quite briskly in the last 3 quarters, apart from that dip that I showed you. If you look at that same export chart and look at the last 4 quarters, you will see that Indian growth is about manufacturing export growth is about 11.3%, which is very healthy and kind of broadly in line with the way the world economy is going. So exports are driving growth. The temporary factors are receding. Private investment going forward will depend a lot upon capacity utilization and the progress under the IBC. Consumption, I'm going to come back, is going to be a little bit challenged because of oil prices going forward. So the growth projection, which all of you have already seen, for 17-18, it's 6.75%. It's higher than the CSO's estimate, in large part because the CSO has itself acknowledged that they weren't able to fully take account of recent developments. So I don't think they would be at all, they would contest this projection in any way. 6.75 on the real, and also inflation is higher in the second half than the first half, which they weren't fully able to incorporate. We project nominal GDP growth this year for about 10.5%. And going forward next year, because of all these factors, we think that growth will rise to between 7 and 7.5. You've, of course, seen the IMF and World Bank projections, so this is in the ballpark. Now, all projections, these are projections. They have a lot of error bands around them. Nobody is perfect. I think there's both upside potential, but there's also, challenges and risks that have to be factored in when thinking about this baseline forecast. Export growth could be greater. We find, for example, that exports are growing in line with world growth. There's a kind of a standard elasticity, but that is still lower than what this response of exports was in the previous period. So if export responsiveness picks up, export growth could be higher and overall GDP growth could be higher. And also, I think if the IBC process progresses well, expeditiously, if, actions happen on time, if they're accepted without any glitches, then I think there is a chance that private investment, after so many years of languishing, could also pick up as well. But in terms of the downside risks, I think that we should all be aware of that. That there are factors that we should be very, very watchful about. If oil prices remain at current levels, I think there will be challenges. We know a rule of thumb, every $10 increase in the price of oil, GDP growth comes down by about 0.2 to 0.3%. The current account deficit will deteriorate by about, again, 0.4 percentage points of GDP, $10 billion. Inflation will be higher also by about 0.2, 0.3%. So I think we need to watch oil prices very carefully. That's a risk. Also, sharp corrections to elevated stock prices. Stock prices are elevated. I'll come back to that in a second. If something sharp happens, I think that's another risk we should. Having seen emerging market experiences around the world for the last 20, 25 years, I think we should always be watchful when the macro risks mount, when asset prices are high, that you get this emerging market sudden stall. There's a famous phrase, sudden stop of capital flows. But in India, I think we should worry not about anything serious, but sudden stalls in capital flows, because then macro policies will then have to be tighter. Then you get the classic dilemma between stability and growth, and then has all these consequences. So in a sense, and you can see oil prices 17, 18 this year, about 16% higher than last year, which have held back consumption. And the IMF forecast is for another 12% higher growth next year compared to this year. So that's going to be a risk that we have to contend with. So in a sense, if you wanted to, in a nutshell, capture the current macroeconomic conjuncture, it's about both the story of revival and the story of risks. And markets are reflecting that actually beautifully. Stock prices are at record levels, which means that there's expectations of dynamism going forward, GDP, profit earnings, but interest rates have risen very sharply as well, reflecting concerns about the deficit, oil, slightly higher inflation. So this duality of revival and risk is in some ways the current saga of macroeconomic policy today, which I think we should take account of very carefully. And of course, there is the story about the elevated stock prices, which also we should factor into account. So in some ways, when people say, what is the policy agenda? And we know that this is a very special year ahead for obvious reasons, which I don't have to go into. So I think that in some ways, my own view is that the government doesn't have to do anything new and radical, etc. Just, finishing what it has started already would be, I think, a very ambitious and a very fantastic agenda to complete. Supporting agriculture, because we know there are stresses in the agricultural sector, which are described in the economic survey. Stabilize the GST. I think that we need to stabilize GST because export refunds, compliance, revenue will still have to be achieve an equilibrium. I think we need to complete the twin balance sheet actions. I think that resolution and recapitalization must be accompanied by reforms to kind of shrink the unviable ones and to signal greater private sector participation in the better ones. Finish privatizing Air India, and no small, no mean task to head off any macroeconomic pressures and the possibility of a sudden stall from rising oil prices and possible. This is not a high probability scenario, but as they say, only the paranoid survive, and so eternal vigilance is the price of macroeconomic stability, which I think we need to have going forward. Now, so if I were you and if I wanted you to, kind of cover a few things tomorrow morning's newspapers, apart from what you may already be intending to do, I think there are 4 or 5 in Chapter 1 very important pieces of new evidence which speak to some of the current macroeconomic policy issues. For example, we find that since November 2016, there's been a big increase in individual income tax filers of about 1.8 million new and additional over and above trend growth. The number of GST taxpayers has increased by about 50%, and there's also been some nice boost to individual income tax collections, which are described in box 2. Second very important thing about understanding GST revenues, when the GST numbers for January came out, two newspapers had exactly the opposite interpretations of the data. And I want to give you the definitive interpretation of the data that you must go away with. You may ignore me if you want, but you must go away with this, which is the following. Interpreting GST revenues has been really confused, complicated, 11 months, 12 months, IGST, CGST, etc., etc. Forget all of that. If you want to see how the GST is doing, look at what were the pre-GST revenues, which was something like, I think the number is 9.6 million in 2016-17, and what is the total sum of GST revenues this year? And then you have to make some adjustments for one-off factors. If you do that, we find that GST revenues are growing at about 12%, and the buoyancy is well above historical. So for such the early experience of such a transformative change is already providing fairly buoyant revenues. So I think the promise going forward is very good. Similarly, I think we showed that the textile package had some important effects on one particular sector, ready-made garments, not all, which you should look at. One point I want to emphasize to all those market watchers here is that our view is that markets are misinterpreting the borrowing by central and state governments. Markets kind of correlate in a one-to-one fashion market borrowings with the underlying fiscal deficit. In India, that's not quite right. In fact, it's wrong. You should read box 8. And our estimate is that about 40,000 crores of extra borrowing by the center and the states does not reflect the underlying deficit by either of these. So I think that's an important message. It's also, for me, it is a valuable learning experience to understand how to think about borrowing, the deficits, and other aspects of our fiscal arrangements. Last, important, there's a whole 3.5-page box on how to think about the Indian stock market boom. It is different from what's going on around the world, but for very different reasons. And you should read up that. But I think that what the takeaway from that is that there is no room for complacency on this level of asset prices. We need heightened vigilance. Boredom level on a scale of 0 to 10 is 0 or 10? Stamina for 10 minutes, 15 minutes? Yeah? I take it, yes? Yes? Yes, yes. Not from this side, that side. Okay. So I want to highlight some new analysis and research that we've done. Not everything, but a few highlights. I think that, if you read chapter 2 on the GST, again, thanks to the cooperation we got, I learned 8 things about the Indian economy that I did not know. I mean, it's just amazing how much the GST is going to, forget about taxes, revenues, buoyancies, etc. Our understanding of the Indian economy is going to increase by an order of magnitude, and we have some early samplers from that. For example, I told you about the increase in indirect taxpayers. Also, how many, taxpayers filed under the GST who did not have to file, who did not have to be part of the composition scheme. Huge numbers. For the first time, I think we have estimates of the size of the formal sector in India, formal sector employment, formal sector economic activity. And I think I was blown away. So, for example, if you take the stock of formal employment in the non-agricultural sector, our estimate is that between 30 and 50% of this workforce is employed in the formal sector. It's a stock estimate, not a flow estimate. Similarly, if you look at the structure of exports in India, very unusual, very different from other countries. For the first time ever in the history of Indian economics, we have estimates of which states export how much internationally. It's amazing. And if you look at that and analyze that, you find that states that export more are also internationally are also the states that are more prosperous in terms of having a higher per capita GST. So this is just, the kind of wow, the epiphanic understanding that we got from the Indian economy is possible, and the GST is going to provide more and more such insights going forward. We have a chapter on investment savings slowdown in general. What are the lessons for India? You find that the Indian investment savings slowdown is unusual, never happened before like this. It's been long. You know, investment went up 9 percentage points in 4 years. It's come down by about by 6 percentage points over 8 years, and that's still continuing. And I think this has implications for how quickly investment will turn around. One very important thing is that, you know, people, if you think about India, and in fact all over the world, people think investment and savings are the same. You know, I mean, routinely people will say, we must raise investment, we must raise savings. But actually, there's a big difference. It's actually very much more important or urgent to reignite investment than it is to raise savings, for example. We have a chapter saying, you know, can India continue its dynamism going forward compared to other countries, you know, from a kind of development perspective, looking at other countries as well? And, you know, there's a lot of talk about the middle income trap. The middle income trap turned out to be not true, but something similar could potentially happen to a low middle income country like India. It's not inevitable, but, you know, there are these headwinds, you know, coming against countries like India, you know, the globalization backlash, which means our exports will be affected. You know, can we move from low productivity sectors to higher productivity dynamic sectors? I think you see the evidence in India is still not compelling and powerful. Human capital, how are we doing? There's a box we do based on ASR data on how far we are truly away from the global human capital frontier, and it should give us pause for thought, which is reflection, because we're still very far away from that. And of course, you know, the climate change, we have a chapter on that, which I'll talk about in a second, which also. So these are all headwinds that are going to challenge India going forward in other countries, and we talk about how we should meet them. Climate change, we have a whole chapter which uses detailed data, and really want to thank Dr. Rajivan and the Department of Biosciences giving us such detailed data which we were able to analyze. And we have some really, really interesting findings, how India is becoming hotter, drier, more extreme, and we calculate that agricultural incomes in the medium term could decline by about 25%, especially there's a big divide between irrigated India and unirrigated India, between rain-fed crops and irrigated crops. So really fascinating findings on that. We have a whole chapter on gender, and I think inconsistent with that. And lots of things to say about gender, and I'm not going to go into that. But one of the new things we say in this, which I don't think has been pointed out enough, is that we know that the sex ratio in India is highly skewed. You know, if you go to Punjab, Haryana, you'll see it. But there is a different and maybe deeper phenomenon of son preference, which we call son meta preference. And you can get at that not by looking at the sex ratio at birth, but by looking at the sex ratio of the last child. Is the last child more male than female? And what you find is that in India, it's very striking. You look at the difference between the top two charts. That's the sex ratio if it's the last child, skewed towards males. If it's not the last child, more females. So it's really quite striking, and that's not true of a country like Indonesia and many, many other countries. So we use this to come up with a cute new kind of, it's kind of a new notional category of unwanted girls, and we estimate there are about 21 million unwanted girls in India. This is kind of parallels. Amartya Sen had this famous calculation about missing women. I think there's a kind of a deeper counterpart to that. But then on gender, there's a reason for optimism. I think we've improved on a lot of indicators, but on some indicators we haven't improved, and this deeper societal son preference is partly one of them. For the first time, we have a chapter on science and technology. I think that we are saying that science and technology needs a big push. We need to increase the R&D, and perhaps we need to do this much more in mission mode. I mean, I think very, very important, the scientific temper of debate, openness, inquiry, lack of dogma, lack of religious obscurantism. All of this, I think, is very important. I think if we are to become a major producer of knowledge, I think this requires a big push. And then we have a whole chapter on the pendency and the delays in the judicial and appellate process. I would urge you to read that. If you look at the High Court, the Supreme Court, Tax Department, appellate tribunals, I mean, the stock of pendencies is high and rising, and we think the next frontier in terms of improving the ease of doing business, where we've done very well so far, is in fact to get more timely, less delayed justice. And I think this is a chart which shows how the pendencies are rising in the tribunals and the tax department. And one of the terms that we used in an early survey was cooperative and competitive federalism, how the center and the states should interact. And here we have this slightly provocative idea of maybe should we have something like a cooperative separation of powers between government and judiciary, with a view to actually expediting the process of delay insofar as it affects economic activity. And that's something that we discuss in a chapter as well. So the chapters on science and technology and pendency in the judicial process are actually new and probably have not received as much focus in past surveys. We wanted to emphasize that. Now, this is my last slide. I'll stop. So coming back to the current conjuncture, a lot of achievements, revival in activity, but also nascent emerging macroeconomic pressures. So it's that we need to keep in mind as the overall framework. What are the lessons for the future? I think obviously there are lots of key medium-term challenges. Last year we highlighted some, but I think education, employment, and agriculture will continue to be key challenges. We discussed some or all of them in greater detail. I think that's well known. But I want to kind of end with two more kind of positive or hopeful lessons of the last year going forward. This is a phrase that I'm hereby taking a patent on this phrase. Anyone who uses it tomorrow will have to pay me a small royalty. And this, if you look over the last 50, 60 years in India, and I'm generalizing and being very glib, I think we've moved in terms of our attitude towards the private sector and the role of the private sector from crony socialism to stigmatized capitalism. I think that's where I think we've been for many years. Stigmatized capitalism, that's why we're very ambivalent about the private sector. I think that that is what made reforms in terms of the twin balance sheet challenge so difficult. The fear that you could end up favoring, the private sector, especially those who did these bad things or imprudent things during the infrastructure boom. I think that if we can address this twin balance sheet challenge with the measures that we're taking, it would actually go a long way, first towards cracking the problem of exit that's been a problem in India, but also it's a very, very noteworthy response in this what I call mahol of stigmatized capitalism. So that's kind of, and that's something that augurs well for the future going forward. The last, and I think maybe the most hopeful thing that I take away from this last year is that all of us know about the GST and how good it's been, and also its teething challenges and how the government is trying to overcome them. And I've now spoken about what an amazing repository of information and data GST is going to be. But I want to end by saying that, the GST Council, the working of the GST Council has shown that cooperative federalism can really work. I mean, if you look at the quality of discussions, the tenor of discussions, and I am firmly of the view that, or let me step back, when people say, what does India need to do by way of policy reform, I can name 20 and you can probably name 40 even better than my 20. But always the question is, how do you get this thing done? Especially in areas where states are involved. I think that's the question that we really have to grapple with. And my own view is that GST Council, cooperative federalism are almost like a technology or how-to of reform going forward, and that needs to be applied in many, many other areas. One marketed power, agriculture, DBT, portability of benefits. health, education, you name it, any area where the centers providing money, the states are involved. I think we need to use the cooperative federalism technology that the GST Council has shown can be made to work in India. Thank you very much for your time, and let's have questions now.
Yeah. Thank you, Dr. Arvind Subramanian ji, for your excellent and incisive presentation. Friends, you have always been cooperative. Please, I'll call one by one. There is sufficient time. He will take many questions, perhaps all questions. So leave it to me. I will cover all of you. Don't worry about it. Let's start with 277, middle row. Yeah.
Yeah, please.
सर, मैं लक्ष्मण CNBC आवाज से सबसे पहले तो आपको बधाई देना चाहूँगा कि आपने पिंक कलर में इस इकोनॉमिक सर्वे के बुक लॉन्च किया। मेरे दो सवाल है छोटे छोटे,
सिर्फ कलर के लिए नहीं, कंटेंट के लिए,
क्योंकि वो कलर उसका परिचायक है। मेरे दो छोटे छोटे सवाल है सर। एक तो जो आपने ग्रोथ का अनुमान दिया 7 to 7.5%, तो इसमें संभावना ज्यादा किधर की तरफ है, 7.5 की तरफ है कि 7 की तरफ है? सेकंड थिंग कि आपने डीमोनेटाइजेशन का जिक्र अभी तक मैंने देख नहीं पाया ठीक से, क्या इस कारोबारी साल में ग्रोथ पे डीमोनेटाइजेशन का असर पड़ा, इसकी आपने समीक्षा की, और नेक्स्ट फिस्कल में इसके असर को क्या किस तरह से आप देख रहे हैं?
देखिए, जब हम 7 to 7.5 देते हैं रेंज, अक्सर से लोग उसका इंटरप्रिटेशन करते हैं कि एवरेज होगा मोस्ट लाइकली, और एक वजह से वो ठीक है, पर आई थिंक दिस टाइम आई डोंट वांट टू से कि बीच में होगा, कि क्योंकि ऊपर भी हो सकता है, नीचे भी हो सकता है, एंड देयर आर फैक्टर्स बोथ वेज. सो अभी के लिए unless we get more data, I don't want to assign probabilities to where we're going to be in that. So that's one. On your जो आपने demonetization पूछा, हम पिछले साल demonetized GST का transitional impact पड़ा, and the pickup in fact is because those effects अभी जो हैं वो हमारे पीछे more and more होते जा रहे हैं. तो गोइंग फॉरवर्ड उनका मतलब जो इम्पैक्ट था जीएसटी का और डिमोनेटाइजेशन का, उसका मतलब आइदर कम और नेग्लिजिबल होगा गोइंग फॉरवर्ड, एंड दैट्स व्हाई द इकोनॉमी इज आल्सो आई थिंक पुटिंग दोज बिहाइंड एंड कमिंग बैक टू इट्स मीडियम टर्म पोटेंशियल. आई जस्ट वांटेड टू से दैट एट 7 to 7.5% जो है, इंडिया वुड वंस अगेन बी द फास्टेस्ट ग्रोइंग मेजर इकोनॉमी इन द वर्ल्ड.
Yeah. Deepika, 1 minute, but try and not club too many questions. Let all your friends have a chance, please. Yeah, Deepika. Please speak into the mic. Yeah. Keep it near your this one.
So you cited stock market rise as one of the risk factors, which so you think in terms of taxation policy there can be some correction which needs to be made, because that's encouraging flows into the stock market?
You know that those are questions that we cannot have provide answers to. You'll have to wait for the budget for answers to questions like that. But I think the broader point is that we've seen around the world that when asset prices go up very much, they always tend to come back, and so we have to be watchful. There's something you should read, and I might as well say this. When we always analyze asset prices like this, I think there are two dilemmas here. You can either make the mistake of saying, oh, this time is different and stock market prices are justified. That's one mistake you can make. Or you can say, no, you can, the cry of wolf trap, that, you say, oh, interest rates are going to start rising. But people have been saying that internationally so often and have been proven wrong that, you have to stay clear of both these traps, as it were.
Yeah.
Let me just say that the higher prices go, I think our vigilance should, increase correspondingly.
Yeah, Sapna, briefly.
Yeah, Sapna
briefly.
here from CNBC TV 18. Sir, in fact, one broad question. You mentioned very clearly, the markets have misinterpreted the government's additional borrowing, and I think it has come down by 30,000 crores to 20 is what they will borrow additionally. It doesn't really have a direct correlation with the fiscal deficit moving up or down. So can you please explain that, number one? Number two, sir, there is no clear inflation forecast, I suppose, for FY19. Would you like to elaborate? And what does it really imply for the fiscal roadmap ahead, keeping this borrowing angle that you have mentioned so far?
See, I think let's be clear about two things. Your first question referred to, what the government said about how much it was going to borrow. The Secretary of Economic Affairs made very clear what the final borrowing requirement is going to be for this year, right? That's one issue, and then, markets have interpreted that as they want to. But, No, I think I don't have a view on that. Our point is quite different, is that whatever the borrowing that's been done by the center, and especially the states, markets have misinterpreted that, because in the case of the states, for example, this year, we expect that about 60,000 crores are going to be financing, the market borrowing is not financing new deficits, but just a change in financing away from the NSSF towards market borrowing. And that's not new deficits. And I don't want markets to misinterpret that. That's the key point.
Yeah, please.
Yeah. Similar. There's a second question about, what is the second question? Inflation, yeah. You see, look, there's a very simple answer to that, is that we have an inflation targeting framework. There is a preferred target of the RBI, which is, the midpoint of the range. So for all practical purposes, that has to be the forecast.
Sir, Arup with Business Standard this side.
Please. I'll come back one by one. Everybody will get a chance. Yes.
Sir, Arup with Business Standard. Sir, so are you saying that in spite of additional borrowing of 200 billion rupees by the center, that will not affect the underlying fiscal deficit target for the year?
No, I did not say that. I think that underlying borrowing that happened reflects a certain deficit, which you will all find out what it's going to be on budget day. But I think over and above that, markets have potentially misinterpreted, especially what the states have been doing.
Yeah, Shishir.
सर आपने जो 10 फैक्ट शिशिर से जो आपने 10 फैक्ट की बात की, उसमें से 9वां फैक्ट है कि ओन डायरेक्ट टैक्स कलेक्शन बाय इंडियन स्टेट्स एंड लोकल गवर्नमेंट. जहाँ तक हम लोग की समझ है कि इंडियन जो स्टेट्स हैं वो डायरेक्ट टैक्स कलेक्ट नहीं करती हैं, तो ऐसे कौन से टैक्सेस हैं जिनके बारे में आप बात कर रहे हैं? और दूसरा मेरा सवाल ये है, जो दीपशिखा ने भी पूछा था कि शेयर बाजार की तेजी को लेकर के बार बार चर्चा चल रही है. आपने भी कहा है कि विजिलेंट होने की जरूरत है. क्या एक बबल है ये?
ये पहला क्वेश्चन मैं एंथनी से पूछूंगा कि क्या डायरेक्ट टैक्सेस हैं स्टेट्स और लोकल गवर्नमेंट्स. एंथनी?
Predominantly there are two. One is the tax on land, second is the stamp duty.
And on the जो second question है, देखिए बहुत सारे लोगों दुनिया में बहुत मिलियंस ऑफ डॉलर्स खोया है. बबल ये है, बबल ये नहीं है, बबल ये वो, मैं वहाँ मेरे पास पैसा नहीं है उतना लूज करने का, गैम्बल करने का. पर आई थिंक दैट द ओनली थिंग इज दैट, सी, remember in all this, I know that all of you are interested in bubble hai ki bubble nahi hai, but if you read box 9, I think the important thing is to understand why it's happening and how it's different from what's happening elsewhere in the world. And the Indian stock market, this boom is very different, and make no mistake about it. It's very different because it reflects, एक तो हमारे interest rates बहुत high हैं. Second, it reflects a massive portfolio reallocation by investors, households, away from gold, financial saving, and real estate into stocks. That's not happened to the same extent, and part of the reason it's happened in India is because of the policy actions. So this makes the Indian stock market very interesting, but also something that we have to monitor very carefully because it's very different from elsewhere. And that's why heightened vigilance is called for.
So,
Yes,
sir, I'm Ruchi Bhatia from ET now.
Yeah, Ruchi, 1 minute. I'll come back to you. I pointed out to her. Yeah.
So good afternoon. This is Surabhi from the Hindu Business Line. You've spoken about high crude oil prices. What kind of a level of crude oil price would the government be comfortable with? And secondly, sir, does this also warrant a cut in the current excise duty rates? Thank you. On oil.
Yeah.
Just to follow up. Sir, just to follow up on that, since we are talking about crude oil prices and and you also said that we need to be more vigilant about the rise in crude oil prices, does it also mean that in terms of vigilance, the government may just reverse on the existing, subsidy, the fact that right now a lot of it is passed on to the consumers, point number one. And secondly, do you think the RBI in a way should take into account the rise in crude oil prices when they do their monetary policy calculations as well?
Yeah, let me answer the set of questions on oil, right? What is the comfort level of government? I think obviously the lower the better. Let me do a sort of a little bit of a mea culpa and say kind of where, to some extent, I myself and we had all misread oil prices. We had thought that oil would not go above 55, at most 60. And I think we've been proven wrong on that, and I think we should admit that. But I do think that there are two things that have contributed to that. Why, in a way? One, of course, is that we thought shale oil would come back at about 50-55. So far, it hasn't come back to the same extent that we wanted to, because I think we've discovered that the shale producers now are more concerned about profit margins than about just expanding activity. So the response has been less, it's been less responsive and less quick. Second, which was a completely unforeseeable thing, is what's happening in Saudi Arabia. I think that the Aramco listing is making oil prices much higher than it would otherwise be. And I don't want to get into all the geopolitics of that, but I think that's what's contributed to that. Now, how should we respond to that? I mean, in terms of your question, the RBI, obviously, it already takes that into account in its inflation projection and therefore its monetary policy. So I don't think, we need to tell the RBI to take that into account. But in terms of what follow-up action should be taken on consumers, excises coming down, et cetera, see, that's a political decision. But the government is committed to its policy of deregulation, and I think that will continue.
So I'll come back to many of you here. Yes.
Yeah, so Zia Haq from the Hindustan Times. Agriculture, sir, about which even Lewis thought there's nothing much to be done other than to move people out. By choosing to talk about...
Sorry, other than?
Other than to move people out.
Yeah, okay.
So
you're taking a dig at me, I notice.
No, I'm taking a dig at Arthur Lewis.
Arthur Lewis.
No, I was saying, sir, by choosing to focus only on, this broader issue of climate change, sir, you seem to skip the main issue. The proximate issue now is prices. Production is not an issue, prices are. And also, sir, rural wages, just about barely growing, sir.
Yeah, by the way, just let me say 2 or 3 things on agriculture. First, we haven't, neglected that. I think if you read the overview chapter, we have something on agriculture. But because remember, in agriculture, there are short-term challenges, there are medium-term challenges, and the climate change is a medium-term challenge. On the short-term challenge, let me say 2 or 3 things which are very important, right? This year, there are 3 or 4 distinct things that are going on in agriculture. We've actually seen a reduction in acreage under sowing both in Kharif and Rabi. So in fact, it's not your typical surplus leading to large declines in prices. This year, in some cases, rice, wheat, even tur, you're actually going to see a reduction in production, and therefore what's going to happen in prices may not be the same as before. So that's one development. Second development, of course, is that for some other crops, you're absolutely right, which we're seeing now, like gram and some of the soya bean, we have seen increases in prices leading to large reductions in, increases in output leading to large reductions in prices. And I think there, the key thing is that we need to have mechanisms that will prevent farmers against the downside. Last year we tried to do that in pulses with more effective procurement. I think we need to do more on that. Third is a completely different category, what we call top: tomatoes, onions, and potatoes. I think there it's a lot about marketing, post-agricultural warehousing, etc. So they require completely different responses. And lastly, wage declines. Yes, it's not that, wage growth has decelerated. It used to be at 7 or 8% in real terms until a few months ago. And I think this year, because the sowing has come down, the demand for labor has come down as well. So certainly, it's part of the cluster of issues that need a lot more. That's why in my policy agenda, if you notice, the first bullet point was support agriculture.
Yeah, please ask
2, 3, 4. 1, 2, 3, 4.
So your overview of the Indian Indian economy is entering a very challenging times ahead. Would you agree to that?
See, don't put words in my mouth. As I said, there's a story of revival and there's a story of some macro challenges. So both coexist. And so the revival story is, you see all the high frequency indicators are, starting to come back from their bottoms and they're accelerating, but we're also seeing from oil, from concerns about the deficit, some macro pressures that they're not threatening at this stage, but it's something that we have to be watchful about.
Yeah, 252. Yeah, Siddharth.
But by the way, before I came here, someone said, "Oh, you're very bullish on the economy." So you have to make up your own mind.
Sir, this is Siddharth from the Times of India. Sir, just wanted to understand, in the first chapter you talk about the fiscal issues and you suggesting a pause in the general government fiscal consolidation compared to last year. This is on page 24. Is that a correct reading?
See, I think that the Secretary has made clear what the borrowing is going to be this year. I think we'll have to see what it implies for the deficit. This has been an unusual year because of GST and demonetization, so we'll have to see. But no surprises, all these are well known.
Yeah. Sir, this is Chetan from Business Television India here, right in front of you. Sir, I would like to ask you, just mentioning about the agricultural reforms that the country needs to undertake. So can you suggest some medium and short-term measures that you are planning so that we can achieve farmers for income or doubling farmers' income by 2022?
Well, you want actually the chapter on agriculture has a lot of these measures. What we need to do both in the short term and the medium term. But remember, and I'm not saying this to evade the question. For 50 years, people have said what needs to be done. What needs to be done is not difficult at all. I think it's how we achieve it, because remember that there's something that all of you. It's now let me turn a little bit a professor rather than a chief economic advisor. When you say what needs to be done, and I say something, say you must do this, someone can turn around to me and said, but why hasn't it happened the last 50 years? So you need a good response to that question. And so I think that's why we need to think more about how we need to do these things. How do states think about agriculture? Why aren't states more responsive to declining farmer incomes? And then how can the center and the states work together? So those are the kinds of things I think we need to think about.
Yeah, please ask you.
Hello, sir. Meghna Mittal from Business Television India. This year, currently, we are estimating a below 7% GDP, which we are planning to achieve above 7% in the next financial year. So I want to know, like this twin balance sheet problem and the private investment, which is currently stalled. Do you think it can pose some kind of risk to the growth in the next year?
See, I think maybe Sanjeev might want to add something as well on this, depending on what's happening in the bankruptcy. See, I think that, look, I think truly some very important actions have been taken, because private investment was stuck for a long, long time, right? And that's because corporates had too much debt, banks couldn't lend, and now. So my own view is that the faster, quicker, cleaner the IBC process is going to be, the quicker this will come around. And also, remember, as growth picks up, there will be more demand as well. And then once we reach higher levels of capacity utilization, the incentive to invest in new capacity will come back as well. Sanjeev, do you want to add something?
Yeah, I mean, you know, the IBC process and the cleaning up of the banking sector and the twin balance sheet problem has really gathered pace. And the use of the Insolvency and Bankruptcy Code in that cleaning up is truly exemplary. In fact, I will ask you to look at volume 2, pages 50 to 52, where I've got some very interesting data on how this process is going forward. It has some great data on how the NCLT is working, what has happened to those 12 cases, if you remember, that the RBI had listed, and some of them will be very shortly coming up for some sort of a resolution, because the time cycle is coming to an end. So I would very strongly urge you to look at volume 2, pages 50 to 52, some very, very interesting data there for the first time available. So please have a look at it.